How's it going, everybody? My name is Antonio. Thank you for being here. You're about to watch or listen to another one of the 2023 Outlook series episode. This one, we are going to be talking about uranium, but not only uranium. And I have Warren Irwin with me today, the fund manager who's not as bullish on uranium, but still bullish. And I guess that turns him bearish. I don't know, Warren, what would you say?
Yeah, I'm labeled as the bear because I'm not as bullish as the super bulls out there. So there's a lot of hype in the uranium sector, as you're aware. And I've been just around the block too many times to get super duper bullish like a lot of the neophytes are right now.
Well, that's a good point that we can get it from. You say you've been around the block for too long. I guess since this is the first time I'm speaking to you, maybe you can tell me who you are and why you think you're worth listening to.
Yeah, well, I'm Warren Irwin. I run Rosseau Asset Management. We are a resource-based hedge fund. We're probably one of the most successful out there. I believe we are I do not know of a resource hedge fund out there in the world that has been around longer than we have. During my 25-year career at Rosseau, I've watched a lot of resource hedge funds come and go. They don't seem to make it through the cycles that easily because it's really tough to it's really tough to survive in this business, frankly. And but we've managed to survive. We've picked enough winners throughout the years, and we're sitting here at the beginning of a cycle, ready to start another mining cycle. So I'm really looking forward to the next decade here. Prior to starting Rosseau 25 years ago, I worked at Deutsche Bank. I was the director of proprietary trading there at Deutsche Bank Canada for 3 years. Prior to that, I worked at Scotia for 3 years as head of high yield research. But prior to that, I was in investment banking at CIBC. And before that, I was in MBA school. Before that, I was also at Scotia doing a lot of mathematical analysis in the fixed income market. My undergrad's in math. I have an MBA. I'm also a chartered financial analyst too. So I've got all the letters you need. And so I've been around a long time, and I've seen a lot of cycles. And it's up to me to kind of share some of those stories with your listeners, and just so they have a bit of perhaps a better perspective on what's happened in the past and what may happen in the future.
Why though? I've been wondering because I saw a couple of your interviews, and I'm wondering, you're clearly not here trying to make any money. Like, I don't know you're selling any newsletters or whatever. You've got enough assets under management that I guess, or the what wisdom. But why are you here? Like, well, why do you do these interviews?
Yeah, the reason I'm doing it is more of I've had my butt saved in the past by having some old timers who've been in the business and shared their stories to me. Specifically, I have a dear friend of mine who's passed away a few years ago. His name was Dale Hendrick, and he saved my ass from myself in Bre-X. Bre-X, as you may know, is the $5.6 billion fraud that took place in the mid-90s. And I was a neophyte investor at the time, and he sat me down, told me the most incredible stories that I couldn't believe. And I had an answer to every reason he believed Bre-X was a fraud. I had a logical explanation, but it still kept in the back of my mind. So when things started getting really weird, it really helped me approach it a little bit better. So he saved my butt financially by telling me a number of things that only an old timer would know. And so he really saved me. So when I see stupid stuff happening in the market, my view is, why don't I get out there? I'll share some of my stories with investors. Some will take them. They'll do with the stories what they wish. They'll look at things perhaps a bit different. And if I could save a few guys from financial ruin by sharing some of my war stories, that's really why I'm here. And you're exactly right. My minimum to invest in my fund is $500,000. So most people don't meet that threshold, especially when you want to invest a very small amount with me, because I run a high risk book. Now, I would encourage anybody who has an interest in mining investing is to read a little 4-page article I wrote on BRIEX, and it talks about Dale Hendrick. It talks about what I went through in my early days of investing in the mid 90s and what I learned from that experience. And I think everybody could take away something that they could learn from it. And the reason I wrote it was the movie Gold came out, which was supposedly, written about BRIEX. It was so far off base that I thought I'd just write a little story about what really happened. At the time, I was reviewing a script for another Hollywood movie. I was working with another producer, and unfortunately, the other producer didn't get published. But I thought he had a script that was more towards the truth. So when Gold did come out, it has some of the concepts of what happened at BRIEX, but I felt the need to write again for the benefit of others, to read some of my stories and some of my experiences with BRIEX, so that BRIEX won't happen again. And because it was quite an adventure, that's for sure.
Mm-hmm. You're not afraid that Mike's going to come and find you?
Well, yeah, I guess you've read the article, because I went out on the limb, unlike anybody else in the world, and I said Mike de Guzman is alive. I know people who've seen him since he was supposedly fell from the helicopter. So if Mike wants to kill me here, how many 27 years later? I knew Mike before he disappeared, and I always found him to be a decent guy. And obviously, he got away with a scam. On paper, from my recollections from filings in the Canadian capital markets, he made about $27 million US. But there's no doubt he probably had some additional shares offshore somewhere else where he may have made some money. But he got away with possibly the perfect crime. It's a pretty big number, frankly. When you think about it, the mid 90s, for somebody to make $27 million US and get away with it, like, that doesn't happen too often. So Mike was a very smart guy, and he and the other parties at BRIEX got away with one hell of a scam. Nobody got charged. Nobody did jail time. Nobody paid any fines. It was the perfect crime. And the best 4-page article I think out there is the one I wrote. So just Google my name and BRIEX, and you'll find a very, very worthwhile 4-page read that I think everybody can learn a lot from.
I agree. I mean, the movie is interesting to watch, though. Matthew McConaughey is normally easy to look at, but at that movie specifically, not. I don't know why they made him that way, because he doesn't even look like the guy. But anyways, you're saying that was a lot of money
for the
mid-90s. That's a hell of a lot of money for right now too. I'm answering it. So,
well, yeah, I know the reason they made him look like that, because they made him look like David Walsh, the CEO, and that was sort of along the lines of what David looked like. And I know Matthew likes to look like whoever he's playing. And David was indeed overweight, heavy drinker, promoter, and quite a character. And of course, I think I may have mentioned in the article, I don't believe he was part of the scam. I think it was all related to the geos that were involved on site.
Makes sense. So I saw people talking about it somewhere in the comments, wherever it might have been, saying, why do you think he's out there? And somebody answered, he's out there trying to beat the stocks down, so you can go ahead and buy the cheap uranium stocks. Again, I thought that was quite of a accusation, so to say. But I guess there's anything out there on the internet. Thank you for clarifying this. It's an explanation.
Yeah, well, I think if anybody's followed me for any length of time in the uranium space, when I got involved in NexGen, I was out there telling everybody to buy NexGen, and I had done a proprietary model by hand. The analyst who worked for me at the time and myself, we spent many weeks on this model, and we came up with the initial resource estimate of 200 million pounds. And that was 3 months before the official SRK estimate came out, which was coincidentally 200 million pounds. So we did it all by hand. It was difficult to do. All the drill holes were directional drilling. So it's not as if the drill holes were straight. They were all curved. So we had to map all the curves of each drill hole. It was a very, very difficult process. I did the work, and I told the world. And the reason I was comfortable telling the world is I'd done my work, and I knew the uranium was there, and unlike today, the attitude of uranium investors back then, it was very much out of favor. So that was a fantastic time, in my opinion, to get involved in something like that, because they put out good drill holes, nobody would care. And today is quite the contrary. The uranium sector is so jacked up and so hyped up that it's tough to buy a good quality, cheap uranium stock at present.
So I guess that's what changed, because I was going to ask you, you did a Palisades Gold interview like 5 or 6 years ago, and you said that this was going to be a rip your face off uranium rally.
Yeah.
And ever since, the fundamentals, I guess from what I've seen, have only gotten better. Yet you no longer believe that's going to be the case. So what else changed?
Well, when I was involved in NexGen, we're talking early days, and I was over 10% of the company. And that's possibly another reason you may want to listen to me. I probably made more money than most people in the uranium sector, right? And when I was there, I looked at the same numbers people are looking at today and going, well, you've got 180 million demand, you've got 130 million mine supply, and then there's this $40-50 million shortfall made up by secondary supply. And I said, well, it's just a matter of time before that supply is gone, right? Yeah. Well, that might have been 7 years ago, and all the bulls today are going, oh yeah, there's the secondary supply is winding down. I'm going, well, one, where did the secondary supply come from? Well, we don't know exactly where it's coming from, but it's coming down. The people are telling us there's less and less available. I said, well, okay, well, I was told 7 years ago by a very smart friend of mine who said, Warren, he says, don't get so bullish on uranium. There's a billion pounds out there. And I couldn't believe it. I thought it was ridiculous. So I stuck my neck out and made a prediction there. And I was right and I was wrong in that, the price of uranium did climb from, $17 to 50 over time. But it wasn't a rip your face off uranium rally like, let's say, the last cycle where it spiked in 2006, 2007 to about $140 a pound. But so what's happened over the past 7 years, and I've experienced this firsthand, is we've had 40 to 50 million pounds hit the market out of nowhere, out of outer space, right? And in addition to that, we've also had Sprott Uranium Trust and Yellowcake both trying to jam the market higher with another 70 million pounds bought. So quick math, you take 7 years times a deficit of 50 million pounds a year, that's 350 million pounds came out of nowhere. Plus Yellowcake and Sprott bought another 70 million pounds. That adds up to about 420 million pounds hit the spot market in the last 7 years. Nobody knows where it came from. And the people today are talking about how that's all over and this is a new world order and we're going to spike to $200 a pound, which I'm going, well, that's completely and totally outrageous. It may spike there for a nanosecond, but if it does, trust me, sell all your uranium stocks because there's lots and lots of uranium in the world. And I would imagine every single project I've ever seen in my entire career is probably economic at $100 a pound uranium. So at $200 a pound, you'll be yanking uranium out of seawater, right? Mm-hmm. So the reason I'm focused on the supply issue really is because when you look at supply and demand, where the uranium market differs from all other markets. So if you're trying to play this whole hype with the green energy, battery metal garbage, right? You could see a 20 to 30% increase in the sale of electric vehicles, right? Year over year, or at least over a couple of years. So you could see double-digit growth for sure in electric vehicles, which means you'll get double-digit growth in lithium. And they use a significant amount of lithium in their batteries, for instance. And so that could lead to pretty darn strong growth in the lithium market. Whereas on the demand side, you've got, not everybody in the world wants a nuclear reactor in their backyard. And I'm definitely pro-nuclear. It's the only way we're going to provide non-CO2 generating baseload power. Some of these new SMR, small modular reactors, are fantastic. And I could see a lot of instances where you're going to pop in a few SMRs into these old, maybe 60 to 80-year-old nuclear plants, and they'll just be refurbished with SMRs or something along those lines. But the reality is we've got an install base of 450 reactors, and people are all hyped up about, well, we've got 50 reactors under construction in China, right? So again, just run some numbers. 50 reactors coming on stream over, let's say, 5 years is 10 a year. You go 10 over 450 is low single-digit growth in demand, right? What that doesn't take into account is the average age of the nuclear reactor fleet is around 30 years, right? So these reactors are getting pretty old. A number of them are especially in the US, you're seeing extensions to 60 to 80 years, right? In Japan, too, they're looking at extending life of these reactors. So people are saying, well, Warren, aren't you, you could tell they're just extending the life of all these reactors. Isn't that going to increase demand? I'm going, no, it's not going to increase demand. It'll reduce the reduction of demand due to these old reactors coming offline. Recently, I've seen, people talk about, all the reactors in Japan are coming back on stream. And I go, well, 10 of them are already on stream. There's another 17 out there. And I think, let's say all those get permitted to be back on stream. And, well, you have 17 coming off stream. And just in the US alone, you have another 7 coming off stream over the period of time. Those will be fired up. And then the rest of the world still has ones coming off. So you've got fair number of these old reactors, and we have an old reactor base because, frankly, the world has been anti-nuke since the 70s, right? So you've got a lot of old reactors coming off stream. Some of them will have their lives extended, and the build out right now is in China. We all know there's I think there's one SMR approved in Canada and one approved in the US, right? So we haven't even got that ramped up yet, but in time there will be increased demand for uranium beyond the low single digits. I'm hoping as people start doing that, but it's going to be quite a number of years down the pipe. So because I don't think demand growth here near term is going to be really strong, it'll be low single digits, steady Eddie. But it's really a supply side, right? And whether or not we have supply disruptions or whatever. So when you look at it, the biggest factor in that really is a secondary supply that keeps hitting the market. And I don't believe I have a handle on that secondary supply to the extent that I could be a raging bull. And I don't think the raging bulls actually have a handle on that supply. The other unique situation I know would be, given I was at one point the largest shareholder of NexGen, which is the biggest and richest uranium mine in the world. I believe I have a sense as to when that could realistically be built. And I believe, within 2 years, it's realistic to expect they'll be permitted by then. And construction, I'm sticking my neck out and saying in 4 years' time, it'll be built after that, four more years of construction. So it's not a super complicated mine. It's quite a small mine just because it's so rich. So that's 30 million pounds a year hitting the market on a market which consumes 180. So that's absolutely massively significant too. And what would I do if I was the CEO of NexGen, and I'm not, and I haven't talked to the CEO about these issues, is once I get my permits and I have a firm mine plan, I've got a firm mine builder and I have a schedule. And if that schedule says, we'll get the mine built in 3 years, 3 years to production, I'd say, okay, let's take an extra 4 years to production. And then you start talking to utilities. And next thing you know, you're selling utilities term uranium out 4 years, 30 million pounds a year, right? That's a fair amount of, so you've got to, people are getting all jacked about this uranium cycle, but they're getting jacked about what a couple year area, a couple year time frame where there's going to be a shortage of uranium. They're going to spike it up, and then what's going to happen then? It's going to come crashing down again, because one of two things will happen. Either the NexGen volume will bring things back into line again. The Kazakhs will crank up production because they want to make a fortune too. Or if it stays high, you're going to get tons of new uranium mines out there. So there isn't a scenario where it spikes and stays high. There is not. I don't care what anybody says about it. There's no scenario for that. I just know too many uranium projects. And as I may have mentioned, I was around the last cycle also. And so anyways, that's sort of my view on kind of this cycle is I own some NexGen. I've been gradually moving out of it. I own a couple of junky uranium companies, and we get a spike. If there are a bunch of speculators who don't know the uranium market that well, jump in, spike it. I'm selling into that, and that's what I'd recommend everybody does, and just get out of the sector, because the long term, there's lots of uranium out there, and supply and demand's not growing that super fast.
Right. Okay. Because so you're talking about the spot market here. Where do you think it's coming from? Like, do you think it's coming from Uzbekistan or some place that is obscure and we're not following, or is this some inventory that is going to eventually dry up?
Well, that's what the bulls are hoping, right? They're hoping it's coming from somewhere. And one thing I've learned about inventories and things, and you see this in the gold market too, is as the price moves, things happen. People are saying, well, we're not a seller here at $50, but the next thing you know, you get a $70 uranium, and there's a couple of stockpiles that some country somewhere has. So they're going, okay, well, why don't we just punt this into the market and we'll make a bunch of dough. And that's really, so it's difficult to predict that. And where it's coming from, I don't know. 420 million pounds hitting the market is pretty significant. And what do you do? Some people were speculating that, it was the Japanese. When after Fukushima in 2011, the Japanese were selling all the uranium. I don't believe that was the case, because as I looked into it at the time, I was told that the Japanese reactors had a lot of their uranium already enriched and put into fuel bundles ready to be used at the reactors. I know right after Fukushima, the Japanese reactors and power companies did have take-or-pay contracts, and they were taking in the uranium, and that uranium could have flipped back, right? And I have not looked at it in that level of detail, but they were required to buy a lot of uranium following Fukushima. Despite the reactors being shut down, they were required to buy uranium. And the question is, did they flip that back into the market? I think there's probably a good chance that uranium got flipped back to the market, but then the uranium they had already stockpiled for operations was in a form that would be less likely to flip back into the market, because you'd have to deconsolidate the fuel bundles and reverse the whole process to get it sold. So there are a lot of moving parts here. And when people are saying, well, they're going to restart the Japanese reactors and they're going to need lots more uranium, I say, well, they probably still have they still have a lot of the inventory that they had when they shut down. So don't expect a big bump in demand like right away. And but anyways, there's as you can imagine, there's a lot of moving parts here. And you have to be pretty brave to say that, okay, for the past 7 years, 40 to 50 million pounds came out of nowhere, but all of a sudden now that's going to stop. And the market's going to get super tight, and it's going to spike to 200 or 150 or whatever, and it's going to stay there, which is impossible to stay that high, frankly.
But a spike is possible, I guess, because of the time delta that it takes from getting to the incentive price and actually getting the mines into production. You do think it could spike in between?
Yeah, and here's the other dynamic. Okay, let's say it does spike, right? Last time it did spike to 140. I'm not sure how, like the majority of this is the tricky part of the uranium market, is there's a spot market and a term market. The majority, almost all of the market, is really the term market, and the spot market really means virtually nothing. And I'm not sure how high the term market got back in 2006, 2007, but it was nowhere near the 140, right? The term guys aren't going to, we're not jumping at those kind of levels. And I do not know off the top of my head. I used to know a few years ago what the peak in term was back in 2006, 2007, but it was nowhere near the 140. But retail investors, they'll get jacked on the fact that spot's moving. Spot represents less than 10% of the market. So if you want to get excited about some indicator that really doesn't mean anything to anybody, especially the utility buyers, that's another bit of a weakness here in this whole bull theory too.
I guess it was utilities signing contracts that are around 100 though last time. So the long-term price, according to Cameco's website, it went to almost 100.
Yeah. I believe that doesn't sound unreasonable. Yeah. So you've had spot at 140, term at 100. Yeah. Totally reasonable. So you've had a very small amount of trading, took it up to 140, right? And I don't doubt it was speculators jumping into an illiquid market to jam it up there and run all the uranium stocks, and on the other side they were selling off. So if you want, I could also clear up some misconceptions about the last uranium cycle, at least from what I saw versus what the uranium bulls are telling people happened last cycle.
Yeah, because I guess the narrative is that utilities panicked because Cigar Lake flooded, or at least that's how I learned it. Is that not true?
Well, there were a couple floods, right? From I think I've lost track of all the floods, but there have been quite a number of floods, and the reason Cameco is susceptible to floods is their mines are some of the most difficult in the world, and they're along the unconformity of the basement rock. And the areas, there's this big bowl of basement rock, made up of basement rocks, and on the top is sand. And the uranium, for whatever way it's deposited, there's two theories. It's either the rain has leached it out of the sand, and through chemical reactions, it's precipitated at the unconformity, which is where the sandstone hits the hard rock. Or the other one is it comes up through feeders in the hard rock, and once it hits the sand, it precipitates and creates the deposit. So there's two theories there. I don't know which one's right, but in their instance, in Cameco's instance, the deposits are in the unconformity, which is the combination between the sand, and the hard rock. And with sand, there's a significant amount of water there, so they have to do freeze walling. You have to freeze the sand because there's water in it, and so they actually mine it. And then they're using some interesting techniques to mine there. They're using freeze walling, which is reasonably complicated. They're also using jet boring, where they basically put in a high pressure hose and turn the material that's hosts the uranium into a slurry, and that's pumped out, and the uranium is extracted. And then they're also using techniques to mine some of the ultra high grade, where you can't really get miners too close to the uranium. So they're using raise boring techniques, which are sort of pretty innovative too. So they're some of the more complicated mines. So they've been flooded out a few times. So it seems to be a regular thing that happens there, and they solve the problem and we get on with life, But so that's kind of where I am now. And so where did I make my money? Let's say if you did a postmortem on it this past cycle, I bought a company with tremendous fundamentals when the sector is out of favor. And that's how I made the money. Now the sector is getting super hyped up. And if a NexGen discovery was made, my sense is a couple drill holes into it, it'll be trading way above fair value. So it's a market that's really difficult to get in cheap with the risk reward in your favor, just because of the amount of excitement and hype in it, right? So you could tell I'm possibly a little bit more conservative than a lot of the players in the space. Now let's talk about the last cycle, okay, and the things I learned. So when I was involved in the last cycle, 06, 07, so that's how many years ago? These were 16 years ago, 16 years ago, let's say. And so I would have been about 42. So I wasn't a punk kid, but I was reasonably new to uranium, right? It was something so what I did there was I made a bunch of money. I invested in two fundamental situations. Extract uranium was one, and I made a whole pile of money on that. We sold that to the Chinese. It was called the Husab deposit in Namibia. Also, I was involved in Con Resources, and we had our project expropriated by the Mongolian government. Because I think the Russians didn't like the idea that the Western company mining uranium so close to the Russian border. So we eventually grinded it out with a lawsuit, and we won over a judgment over $100 million US, and we settled that out with them. So we got some money there. And then I was also involved in two names that are still household names today in the uranium space. Global Atomic, I was an early investor in that. I was also an investor in Goviax, that's still involved today. Both those are Niger companies. And then I was involved in one called U308 that went to zero. Okay, so that's sort of my experience there. So I made money last cycle too. I didn't blow myself up. But here's the reality of the last cycle that is being twisted by market participants to get people all jacked up and get all the hype going this cycle, which is, in my opinion, quite untruthful when you look, again, at the mathematics of it all. If you look at the name I keep hearing again and again was Paladin, right? Paladin went from pennies to $10, right? So depending where you get it, you've got it in a nickel, went to $10, or if you went to dime, went to $10, you made 100 times your money, whatever. So there was a fair amount of money made. Not a lot of people got in at the super low levels, and very few of them got in at super low levels and continued on to $10. So it's a bit of a, it's a bit of an urban legend, right, about the money made there. But I know of one analyst who worked on Bay Street, and he made $30 million, and that really helped him in his retirement. So he made some money there. It's the only guy that I'm aware of that made big money. I think Rick Rull has mentioned he was an investor in that. I'm not sure how much Rick made, but my friend made $30 million. So that's a pretty good pass for a guy for your retirement fund. But that's the only big win I'm aware of last cycle. So you've got Paladin made a big win, of course, but what people forget to say about Paladin is Paladin ramped right up $10 and then totally collapsed, and over the next number of years settled that back exactly where it was before the whole rally started, right? So it went right up, collapsed right back down. Check the stock graphs, you'll see that. So then, well, what about the other uranium companies? There's rumors of, in total, I've heard as high as 600 uranium juniors or 400 uranium juniors. And let's say at the start of this cycle, people are saying there might have been, let's say 20 uranium juniors at the beginning of this cycle. Well, so what happened to the 400 to 600 juniors in the meantime? Well, virtually all of them went to zero. So this bull narrative being put forth is some guys made a whole bunch of money on Paladin, but you had to sell at the top or near the top, or you'd have lost all your money again, because it went right back eventually over a period of years after the cycle changed, and after Fukushima, it went back to the low pennies again. But so we're looking at what happened to 400 to 600 other names? Well, they went to zero. So if you're out there talking about the massive amounts of money made in the uranium cycle, last cycle, it's urban legend. Like a bunch of money was made on Paladin, but Paladin went back to where it started from over a period of a few years. 400 to 600 juniors went to zero. So where's all the value creation? It's not a value creation story. It's a value transfer story. It's the people who created the bucket shop juniors who sold out to the suckers at the top, and it's the suckers who lost all that money, right? So that's the reality I see out there the last cycle. There was no huge value creation when you have a big ramp up and a big ramp down. There's no long-term value creation. And you look at this cycle, where was the value creation? Without a doubt, it was NexGen. NexGen went from being worth virtually nothing to being worth $3 billion. There was value created there, and there were winners, and there weren't losers on the other side. Whereas the last cycle, it was a spike and a collapse. That's the truth. 400 to 600 names disappeared, went to zero. And everybody talks about Paladin, and there's probably, a bunch of others that did really well too, that people made money on, but those all collapsed once the spike in uranium ended. So that's the reality of the last cycle. And the reason people are so jacked about it this time is a number of people are positioned, ready to sell their paper to the unsuspecting new people that are coming into the market who believe the fantasy of $200 uranium, right?
Hmm. So it's basically just a handful of people who made the money. And if you're a retail investor sitting at home and you're hoping to be part of that little percentage of money, a little percentage of people who made money, it's not very probable. So what you're saying?
In essence, that's what I'm saying. Yeah, it's a very unpopular thing to say, but it's reality.
And well, you have to know yourself. That's something that I learned last year as well. And you have to know if you can be between those people. And if you think, I mean, if you know that, I guess there's also this belief out there that the early positioned retail investors are going to, stick it to the big man, and the utilities are going to end up paying the higher price and stuff like that. That, I guess, to your experience, hasn't happened before.
Well, you saw last cycle, even you're saying contracting prices got to $100 a ton, right? Or $100 a pound. So,
yeah.
Okay. And then when the price collapsed shortly thereafter, then they were contracting at 75, 60, 50, all the way down to, I remember, all the way down to whatever the lowest level was. So, yeah, there you have it. So if you wonder why I'm not as excited about this uranium market, those are some of my reasons for it. And I've made a pile of money in uranium, and I'm bullish on uranium. I think uranium is a power for the future. I think it's a good sector to invest in. It's tough for me right now to get jacked up on paying the valuations out there right now, and it's not in my nature to go into a sector, to put new money into a sector that's so jacked up with irrational people that, I like it when people are irrationally the other way, when people, hate the sector I'm investing in. Just like when I invested in uranium, everybody hated uranium. And, I'm investing right now in, let's say, metallurgical coal. There's hardly anything in the world more hated than coal right now. But the reality is, to make a Tesla, you need metallurgical coal, and there's no substitute for it. And, some people have fantasies about, hydrogen and new technologies and things like that, but those are years in the future. Yeah. And so anyways, that's sort of, I hate to throw, cold water on a quite a party that's just get going, but, we'll see how this party goes, how high the price goes this time. And, it's all in my personal self-interest to have the price of uranium go to 150, because I own I own some junky uranium stocks, and I'll tell you, I'll be peeling those things off. And I think
you're doing me a service, so I'm thankful for it, because you're bringing stuff up for my consideration that I hadn't considered before. I assume due to my lack of experience and to a certain extent intellect as well. So I appreciate you doing this, because I also get so I get hanged up on the fundamentals where it looks super bullish in the fundamentals, and you're not really thinking about some of the stuff that you can only know if you have experience in these sectors. And that's where I think you bring the value. So I do appreciate that.
Well, I'll give you an example, right? One thing I really know is on the supply side, because as in supply, not meaning where all these mystery pounds just keep showing up from, but from, uranium properties, because, I was around last cycle, so I know all the ones that were all hyped up last cycle and never got into production. So those will be the first batch. But I'll give you an example of something that's kind of fascinating is, I know some guys who own a significant part of the Viken deposit in Sweden. The Viken deposit has over 1 billion pounds of uranium, and Sweden is just in the process of lifting the moratorium on mining uranium in Sweden. So that's 1 billion pounds sitting there, already drilled out, ready to go. Don't know what the economic level they could be extracted at, but that's just one deposit. There's also a second deposit in Sweden that's also quite large. And, if you listen to these clowns at $200 uranium, well, of course they're economic at $200 uranium, at 150 uranium, and any of these. Those are just off the top of my head, some massive deposits that I know of. And then you look at Cameco, you've seen the Rough Rider transaction. Rough Rider's undeveloped. You've got Cameco's got a whole stable of undeveloped uranium projects for Kintyre, Yeelirrie, Then there's the Ben Lomond deposit in Australia. Then you've got in Niger, there's Goviax's deposit. There's Global Atomics deposit, and just go around the world. And there's just so much uranium there, and at any of these crazy levels, they're highly economic and will get built. So any spike in the uranium price will be short term.
Well, what's your take on the situation, by the way, with Global Atomic and the growing red tape around these projects?
Yeah, no, it is a threat to all projects. Like over the years, I'm not sure what the policy right now is in Australia, but they used to have these crazy policies in Australia. The 3 mine policy, and I don't know where they are today, because they're sort of, one day they're pro-nuclear, the other day they're anti-nuclear, and they want to be positive towards the environment, yet they won't allow you to mine uranium in Australia. Like there's no consistency or any common sense to uranium laws in Australia. I also saw this recently with many of your listeners may be aware of Berkeley, which has had that uranium deposit in Spain that never got permitted. I remember being pitched Berkeley, and I go, wow, it looks like you got a really nice deposit there. I really don't think you're ever going to get permitted. Oh yeah, we're almost there on the permitting. We're almost there. Yeah, well, I don't want to take that permitting risk, right? So that's another big risk you have to consider is permitting risk. Wherever you find the uranium, can you get it permitted to build a uranium mine? That's why I like NexGen and the Athabasca Basin in general is in northern Saskatchewan. It's a very well-established uranium mining camp. The people there understand uranium, understand the risks, understand that the risk in mining uranium is not completely and totally outrageous like some people would let on they are. And a lot of people have worked in the uranium mines for many decades, and things just continue to go nicely. So, but there is a residual element of the green movement that remains anti-nuclear and just don't like mines in their backyard, just like they don't like to have nuclear power plants in their backyard, right? So, yeah, right. There you have it. So,
I guess, though, because you've said before that you think that uranium is going to tick higher over the next decade, as most commodities, I guess, that you're bullish on. And so get into your head, if you had to go into uranium right now, you don't have to give me specific names, but what part of the market would you be going into? Is it the ETFs, the producers, the explorers? Who do you think is not as highly valued?
Well, obviously, Sprott Uranium Trust is probably the least overvalued, because it's just, you're buying uranium, there it is, and you're not paying a crazy multiple on it. And then because I believe the whole sector is a little overhyped, I'd probably play it a little bit more conservatively. NexGen's not a bad one, because you take a look at the 3 majors. There's Cameco, NexGen, and Kazatomprom. I'm not a super big fan of Cameco. And Kazatomprom, would I own anything in Kazakhstan? Absolutely not. So it kind of leaves you with NexGen. And there's a good story behind NexGen, because they're in the process of building a mine. And generally, that's the period of time where your company gets the least amount of hype in it, right? It's the Lassonde curve, as many people are aware of. It's just prior to going into production, sometimes the cheapest time to buy a mining stock. And I remember watching a diamond company called Aber prior to it going into production, and I watched the stock collapse as the production decision was made. And then I watched some really, really smart people picking up shares in Aber prior to production, and they made out like bandits. I think they were picking up around $9 or $10 a share, and before you know, it was $40 a share once they got into production. So there will be a re-rate at some point with NexGen, but it has characteristics that many of the hot money investors in the uranium cycle don't like. It requires patience. And that's
It's
not.
interesting. Yeah, I was just thinking of what you said about NexGen, because it's interesting. You call them one of the majors. Well, they're not yet producing uranium, right? So that they hope to become one of those, and I get that point. But just wondering how you see the risk of that in a rising interest rate environment where they're going to have to finance the build out, and also supply chain issues and ramping inflation in terms of their cost. Like, are they going to be able to finish this on budget and on time? And how do you see that risk?
Yeah, I think the cost structure issues and the supply chain issues. Well, I think the cost structure issues, a lot of those derive from supply chain issues, which were hampered by the COVID. By the time NexGen starts buying a lot of their larger ticket items and gets things like that going, I'm thinking things will have stabilized a bit, and a lot of the supply chain issues will be solved by the time they start construction. And I'm not sure what their risk profile is with respect to ordering long lead time items in advance of receiving their permit. I just don't know their risk tolerance on that front. But you know, they've I believe it's entirely possible. The other important thing about NexGen is because it's so rich, it's not this massive earth moving project. It's a very high grade mine, so capex is not huge, and it's a very small footprint too for the mine. So that's another thing which reduces the some of the costs you'd mentioned quite considerably. Is that it is a small footprint, it's a small mine, and it's being built in a mining area with a bunch of mining, you know, a lot of mining expertise here in Canada to build a mine with. And I think in time we're going to get a lot of these supply chain issues solved.
Okay. You mentioned that you don't like most teams out there, I guess, in the uranium space, and I've heard that before, and I think I agree. Most of them are over promotional, and their projects don't stand up for it. Are there teams that you do like? I mean, if you can give me names, that'd be great. If you don't want to, don't. But are there?
Oh, there's some good teams. I don't recall saying I believe they're all bad teams.
Could have been somebody else than I remembered, but
yeah,
I'm sorry if I'm putting
well,
words in your mouth.
Yeah, well, here's the thing you have with uranium is you know, I remember being invested in a diamond company once, and then when the uranium boom happened, they said, "Well, we're out of diamonds, Warren. We're now into uranium." And I'm going, well, and you know, so that's the risk you have, is the quality of management teams falls off the cliff, and it's about to fall off the cliff, because you know, the people who have been grinding it away in the uranium space, like I could think of a few names, like Garrett Ainsworth was head of exploration at NexGen. He's grinding away. He's doing some uranium stuff. And then you have Ray Ashley, who's used to be in the diamond business, you know, decades and decades ago. He's been in the uranium space, and he's been involved in a bunch of discoveries. And there's a number of guys, obviously, that I'm missing here that were involved with the NexGen discovery. So there are a bunch of guys out there, and they're grinding away. Now, what's going to happen is this sector heats up a bit. You're going to get guys being yanked out of looking for molybdenum or cobalt or whatever the flavor of the day was the last cycle. And they're going to be yanking them in and say, listen, what do you know about uranium? Oh, not much. Well, tell you what, we got this uranium property. Why don't you to promote it and just get out there drilling it? And there you have it. So the quality is going to fall off. Can you imagine if last cycle with 400 to 600 juniors out there, the poor quality of the management teams? And when I was telling all my friends to sell uranium last cycle, they go, Warren, why are you so negative on uranium? I said, well, guys, just look at this. We're looking at, for argument's sake, let's take a number, 500 uranium juniors at the time, right? Near the peak, right? And I said, do the math, 500 uranium juniors and just their SG&A, like just their operating costs, without even doing any exploration, would be a couple $1 million a year. So you multiply that by 500, and you know, you're at $1 billion a year needs to go into the uranium sector just to cover the overhead of all these stupid juniors. I said, this is not at all sustainable, and let alone the amount of money, many multiples of that would be needed to continue any reasonable exploration project. And of course, there aren't 500 good uranium teams. There might be 10, not 500, right? So therein lies the issue. And I was on a panel at VRIC not that long ago, and people said, well, Warren, when does a typical investor know when they should get out of, if they, despite all your cautionary tales, they still want to play the uranium market, they still think they're smarter than everybody else, and they'll be the ones that get out at the high price and not get suckered believing in long-term investing in the uranium cycle, and they get wiped out. They won't be the ones wiped out. They're going to make money. What would you give them advice as to when to sell? And I said, kind of tongue-in-cheek, I said, when you get 200 uranium juniors, because that's a good sense of the stupidity in the marketplace, right? Because the world doesn't need 200 juniors, right? And I was talking, and one person on the panel, we were asking, we were trying to get a baseline. We're going, well, how many uranium juniors do you think they're out there right now? And they're thinking about 100. And it's difficult for me to know the exact number because there's a bunch in Australia, a bunch in Canada, and I'm not that active in the Australian market. So let's say the lady on the panel was correct at 100. So when we get to 200 uranium juniors, probably not a bad time to start looking for the exit before things get too stupid.
Okay, so they asked you how not to lose your shirt in this. Let me ask you the opposite. How do I lose my shirt into it so that I know not to do it? Like if I was set out to lose money, what do I put it on?
If you said, Warren, here's 10 million bucks, please lose it for me in the uranium space. What I would do is I would just wait to get the party started a little bit here. And I would buy the most overhyped and overpromoted uranium stocks. And then I'd ride it through the top. And then as it starts crashing on the other side, I'm going to say, I didn't sell at the top, so I'm going to probably hold this as a long-term investment. And that's when that would ensure that your entire 10 million is gone, because that uranium stock is going to go to zero.
That's what gamblers call their bags, right? Long-term investments.
Yeah.
So, well, give me specific red flags though of stuff that you saw, like blown out share structure or the specific jurisdiction or something else that's like a specific thing to do. You think?
Sure. This is always fun, right? And I really enjoy this. This is what Dale Hendrick used to do with me when I was just starting in the business with Briax. He'd sit there and talk about the kickbacks the head of explorations would be getting on a drilling contract on a per meter basis. It was standard practice in the mining business. I've also seen all sorts, like I've been, if I get to have some energy, I'll write a book on mining stock scams and all the things the miners do to scam investors. And some of the fun ones I've seen, I remember the one CEO of a company, and this is the shame of it all, is actually the company had a good project, but he was too stupid to know that. He was so dishonest, he couldn't be honest, even though he had a project that he could honestly promote and actually build a mine. He was so dishonest. He was renting. What companies like to do, what the juniors like to do, is have the CEOs set up various supply companies. I had a uranium CEO bragging to me about owning half the helicopter company that leases helicopter time to the uranium company, and so he was making a killing off that. I know of another instance where there's a gold company where the CEO had a vehicle rental service, and he'd rent pickup trucks to the company by the hour. And in order for safety purposes, the company needed an ambulance on site. So he bought a piece of crap pickup truck, put a cap on the back and a stretcher in the back of the pickup truck, and he rented it out at $400 a day to the mining company as an ambulance. So that's the type of stuff going on. One of my favorites in the uranium business was this clown I knew who worked on Bay Street, became a head of a diamond company. Then he phones me up one day, Warren, we're not having much luck here with diamonds. We're now a uranium company. And I said, okay, well, that's cool. And good luck with that, click. And then I'm talking to him a while back and said, so where are you right now? Well, we're down here in the US for the presidential inauguration. I said, what are you doing down there? Well, I thought myself and the IR woman would come down here for the presidential inauguration, because it's very important to have to put forward the positive case for uranium mining. And I'm just going, okay, like just the way. One thing about the mining business I've learned is the way CEOs blow the money it's unbelievable how it can be blown. There's nothing like a mining CEO spending other people's money. They just it's incredible sometimes.
So watch, read the company's financials and look what they're spending money on, I guess.
Look at how much they're spending on promotion, right? And look how much they're spending on promotion, travel, investor relations, because it's about promoting, right? It's about making sure you get as many investors, because the mining promoters and the sketchier uranium companies that are going to come out of the woodwork when this cycle heats up more than it is now, they'll be coming in, and anybody with a pulse will have a uranium company, and they'll be trying to raise as much money as they can, and then they'll spend it however they see fit. Another example, recently I stayed away from another company. I was doing due diligence on a management team, and so I phoned up a buddy of mine who knew the individual involved, and he says, he's no longer with our company. And I said, why is that? And he said, well, he never saw the issue of setting up his own independent supply company to supply services to our company and taking a 15%, off the top haircut on that, right? So there's a lot of that out there, and then of course, like Dale was really good to sit down with me and tell me all the tricks about how, head of exploration and some of these sketchier mining companies, even if they are drilling, they'll say, well, pay me X number of dollars per meter drilled into this bank account, and there's a lot of sketchy stuff out there. It's unbelievable. I just learn of new scams, new ways to scam investors. Pretty much, every day goes by, I learn something new about the mining business. I've been doing this for many decades, and I'm learning constantly.
I think you've also said before that you don't necessarily care all that much about the specific commodity, but you're mostly looking for a good company, a good explorer is what you're looking for, that has the potential to make a big discovery that they can then sell for more money, right?
Yeah, that's really the essence of how I invest. People say, well, Warren, what commodities do you like? And I said, really, I don't care. I just need to find a good company. And generally, when I find a good company and I'm able to buy in, you need to buy in reasonably inexpensively, and you'd have to know it has good upside. Usually it's in a sector that's not quite as hyped up as the uranium sector is right now. For instance, I have some investments in copper. Despite all the hype about copper, copper juniors aren't exactly super duper expensive, at least the ones I'm looking at. Despite all the hype about battery metals, I'm involved in a nickel junior that I don't think is super duper expensive. And then, of course, we talked about coal. The majority of people don't understand the difference between metallurgical coal and thermal coal. Thermal coal is the one you burn to make power, and that's what they're doing in Germany now to make it through the winter. But then metallurgical coal is a coal, very high quality coal that goes into making steel, right? And we've been using metallurgical coal to make steel for over 100 years. So that process isn't going to change overnight. They're going to try and reduce the CO2 footprint of it a bit, either with carbon sequestration or, possibly in time injecting a certain amount of hydrogen into the process to reduce the met coal usage. But those are many years off. But met coal right now, it's needed for the green transition, right? It's like needed for the steel, for the Teslas, right? And, people, I saw recently here where Greenpeace was all over a Shell oil platform, offshore oil platform, saying, got to stop drilling for oil. Well, I'm going, well, the reality is, the copper we need to build the Teslas and all the electrification you guys all want, we need to burn diesel fuel in these yellow trucks to create that copper. So we need diesel fuel to generate, to mine the metals that we'll need for the energy transition. So we don't understand why you're trying to shut down Shell from providing us with the diesel fuel we need to get the copper that you guys say you need to make electric cars and improve the power grid. And so there's a lot of really nutty stuff going on globally here. And Greenpeace was hilarious. You just watch those clowns zip up on their Zodiacs, which are made out of petroleum products, powered by gasoline. And they zip up and then they start protesting drilling of oil with Shell. So it's the height of hypocrisy, frankly. And I've been a big basher of Greenpeace because they're the ones in the 70s that got the whole anti-nuke movement going. So it's put us back about half a century on nuclear energy. And to this day, Greenpeace still hasn't figured out that nuclear is the way we need to go. They're still anti-nuclear. And so I think they're just, they've lost the plot, frankly.
Mm-hmm. Where do you think all that goes? I mean, when you look at the world after this super cycle that is being speculated here goes through, what do you see? What do you think the world looks like?
Well, I think what will happen with this super cycle, it'll be not unlike any other mining cycle, and we're starting to see some of it right now in that some of the majors have started to just coin it in terms of cash flow. So they're sitting with billions of dollars on their balance sheets, and they need to buy assets. So they'll go out there and buy some assets, and I'll sell them those assets, and then I'll take that money and I'll reinvest it back in the more early stage juniors again, and try and do that again before the cycle ends. But by the end of the cycle, what will happen is all the properties will be so expensive and overhyped, and commodities will be crazy, and any project that could be put into production is going into production, and then eventually it'll be the way that pretty much every cycle ends. Demand will dip and there'll be massive amounts of supply, price will drop. A lot of the new players, which have a high cost structure and will be underwater, and a couple of years of that and they'll be bankrupt, and then a bunch of them will go out of business, then there'll be curtail the supply, and then the demand will pick up again and there won't be the supply there. Then some people will start promoting some old projects that never got built, or promoting projects that went bankrupt the previous cycle. So it's a very cyclical business, and it ebbs and flows, and you need to really try and understand that cycle. And right now, there's definitely some cheap places in the metal cycle. And that's why you're seeing right now there are some very specific funds set to invest in the uranium space, because they're so convinced that uranium is going to be a massive winner. And my view on that is, okay, cool. That's like going into a fight with one hand tied behind your back, because if I, for some reason tomorrow, don't like the uranium cycle, I'll punt all my remaining uranium stocks and I'll go into copper, nickel, whatever else I wanted to get into. And I have a level of flexibility to go into sectors that I think offer value. And you take a look at copper now. Copper's not super duper expensive. It's still hovering around $4, right? So it's not as if this big copper boom that everybody was expecting is happening, and it hasn't. People were talking, we need a new, we had these clowns out there saying, well, we need this, 3 new Escondidas every year. We're never going to have enough copper to electrify the world. Well, definitely you're not seeing that in the price of copper now. So at $4 copper, people aren't out there going looking for copper mines like crazy at $4 copper. Give me $6 copper, $8 copper, and that'll open up a lot of sources of copper for sure.
Mm-hmm. Well, I guess that's true for most of these things, right? Because you often say that we don't have a shortage of uranium. Uranium is everywhere, obviously, right? But it's really that time period. Same with copper, right? It's the time that it takes to bring new supply into production with growing, protests in South America, red tape, and all that. Do you think that's going to be an issue? Like, can we really go into a severe shortage where we just don't have one of those metals?
Yeah, well, what exacerbates a problem with any of these metals is you get speculators in there. Well, you've just had, Sprott and Yellowcake took 70 million pounds out of the market. Well, that's that supply deficit for a year and a half, 2 years, right? So they're trying to, through speculation, tighten up the market artificially, right? So that also happens with other commodities. You see it with oil and you see it with copper, right? Some of the more liquid names. Yeah, speculation is always a part, but there always seems to be. I've never seen in the history of my career where we've actually run out of things. I'm not sure what happened. The only thing I think of may have happened was when China stopped exporting some rare earth metals for a period of time. I'm not sure how that ended, if that screwed up some supply chains or not. But that's usually the reason, rather than lack of supply. The supply always seems to be there. It's just a matter of what price it comes to market, right?
Right. That makes sense.
I'll give you an example of just a real world example of that. Back, and there are some similarities to uranium cycle. Back in the early 80s, gold hit $800 a pound. And if you were sitting around like I was in the 80s, just kind of sitting there as a punk kid looking at the situation, and you saw, people were taking in grandma's old gold jewelry and, whatever stuff they were finding around the house that had gold in it, they're taking it to get it melted down and get their $800 an ounce for it, right? And so it's surprising sometimes where the supply can come from when prices do get high, and that's in that instance that's where a lot of the supply came from. And then for the next, since the 80s, so the last 40 years, everybody's been waiting for the next big, huge gold spike, which has never happened, right? Like people have been looking for the big, like I remember sitting around in the early days of my investing career, listening to Rob McEwen saying, "Oh, we got $5,000 gold," and wow, Rob McEwen, he's well respected in the mining business, must be coming. I don't know when it's coming, but if Rob McEwen says it must be coming. Well, since then I've learned a lot about the gold market, and the gold market's, in my opinion, reasonably predictable. It just sort of gradually continues to go up as the cost of producing gold and the difficulty of finding it increases. And then along that journey, you've got this line, sometimes it goes above the line, sometimes it goes below the line, and it's hovering around like this. And sometimes you get speculative frenzy or short-term demand needs that ramp it up. And then, well, what do you know? If it's so far off that baseline, then everybody in India decides to punt all their gold and flood the market with gold again. The gold comes crashing back down again. Then the gold gets so cheap, the Indian consumers step forward and go, let's start picking up some gold. And then what they do too, when gold gets too expensive, they stop buying, right? So there's this massive gold inventory in India that helps keep the gold market in check. If you know what I'm saying? So
yeah. I mean, since I started talking to different people, I've also heard $5,000, $10,000 gold, and people would say, "Oh, they've been wrong," and I say, "No. I mean, $10,000 gold is coming. They just never say when. So they just haven't been right yet." So I guess the guy who told you $5,000, I mean, he was right. It's coming, maybe eventually.
That was like 15 years ago. So
okay, yeah,
I think I can call him as being wrong.
I guess that counts as wrong. Yeah, I guess.
Yeah, that's a wrong one. I think. Yeah, but
well, it's been a great conversation. I feel like I want to talk to you again. What would you want to talk about next time? I guess.
Well, who knows? Maybe we could give it a period of time, and I'm sure there'll be some interesting new stuff to talk about.
Okay.
I'm involved in an interesting new nickel play that I'm researching, and it'll be interesting to see when as they start punching some drill holes and get some assays back as to how it's shaping up. It's a really exciting situation. It's called premium nickel. I'd recommend, if anybody wants to check out an interesting stock, go to the website, research all you can about it, and just sit back and see when the results start coming back, if it's something you want to get involved in. I own about 5% of the company. I think they're sitting on a massive nickel discovery. I've been looking at this type of nickel discovery for a long time, and I think it'll be worth multiple billions of dollars. And right now the stock's trading around $200 a share. 200 million, 250 million market cap. And just under $2 a share, but probably $1.70, a little bit less, a little bit more. And but I think it's I'm sitting on it's a tremendous winner. And just so that you don't think I'm bearish, like negative all the time. In this market, there's tremendous ways to make money, and that's why I'm still here after 25 years. I do take some joy in finding discoveries like NexGen. NexGen was fabulous for us. We made almost $100 million on it, right? I was involved in Gold Eagle. That was a big discovery. We sold for $1.3 billion. I was involved in Uranium. We sold that for $1.3 billion. I was involved in Guyana Goldfields. I bought it at 45 cents, sold it at $9. I was involved in Continental Gold, bought it at 50 cents, sold it at $9. I was involved in a bunch of other golds. I made 5 or 7 times my money. There's lots of money to be made. It's exciting. So just because I'm just a little more tempered than some of these enthusiasts, again, I'm bullish on uranium, but I'm not as crazy bullish as some people are out there. I think it's a unique situation here. Is nickel is one of the few metals where downhole EM works really, really well. Downhole electromagnetics can really light up a sector if you have nickel in it. So they've done downhole EM work. They've lit up a lot of plates of what I believe is nickel. But the fact that I believe it's nickel and the CEO believes it's nickel doesn't mean anything until we get a drill hole in it. But my belief, and it's a very strong belief, is that a number of the plates that you'll see on their presentation on their website that they're saying are EM conductors, I believe those, when we hit them with a drill hole, they will be nickel sulfide. And that's when the stock will really get going. So the stock's not going now. It's sort of, so you have lots of time to do your research. Check out all the things that you'd learn. And I think you'd learn a lot from this. You'd realize how de-risked this type of project is and some of the tremendous upside a massive nickel discovery like this could have if it turns out to be as big as I think it will be.
Well, thanks a lot for this overview. I think I'm all out of questions. So unless you think I'm missing something here that you want to add, I thank you for being here.
Well, it's been very nice chatting with you, Antonio. Thank you.